An XRP ETF versus a Bitcoin ETF. Did you know they are not the same? They will not be affected the same way. These coins are absolutely and completely different than each other. Even though the ETF's the same, the way the ETF is going to affect these two assets is completely different. That's what we're going to talk about today. So sit back and relax. I got about a minute and a half of my normal opening and introduction, and then we'll get right to it. XRP's at 58 cents and 59 of another penny. So we're close to 59. We've been fluctuating about a penny up and down in the last day or so. So it's kind of going sideways. Let's check out Quant. Well, we're up from the lows, but we're down from the recent highs. We're at $74.42. That's still a good price. And you know why this stuff fluctuates? People just move their money around, I suppose. Let's look at Crypto Trading Fund. CTF is at 94 cents. We've been not as volatile as this coin has been in the past, but 94 cents is a pretty good price. This is, to me, for myself, this is an accumulation amount, but I've got in what I've got in right now, waiting to trade out on my volatility trades, and then I hold some. Somebody mentioned they were asking the question, why is the price that they see different? And they were looking on the XRPL CTF coin, and it is at a lower price. This is the Polygon price. There's a link in the description if you need to know how to buy it. You can also buy it, I believe, on Sushi Swap. So that's how you can get a hold of it. Okay, let's move on. If you own crypto, you need a self-custody wallet. I've chosen the Decent wallet after owning several different wallets. I believe you will like it too. Use the link in the description. Purchase from my site. It does help support the channel. I appreciate it. So I know XRP doesn't have an ETF yet, but it does have a trust, and it works exactly the same way. The only difference is you have to be an accredited investor to get into the trust. And with an ETF, just the average person can. And that's why there's a regulatory difference between the two. An accredited investor is known to, believed to know more about investing and not willing to take as much of a chance. So the regulation is a little bit lower for it, and it's just a higher standard for it to be an ETF. That's basically the only difference. So in working theory, XRP has an ETF, but are they the same thing? When Bitcoin launched an ETF, you saw two sides. You saw some people saying, no, we don't want it. It will cause price suppression. And you had other people saying, no, it's going to bring in a whole lot of more buyers, and it's going to increase the amount of purchases for Bitcoin. And then some of the other ideas were you don't want BlackRock, so to speak, owning so much in an ETF that they control the market somewhat. So with, price suppression and then the possibility of derivatives coming out. And then people think of things like the most suppressed ETF that's ever existed is probably silver, that the derivatives, the banks are buying the derivatives, and then they just keep the price down for silver, long story short. So when the idea, arises for XRP, there's a lot of people that are like, no, and they're using the same argument that it was for Bitcoin ETF for the XRP ETF, saying, no, there would be price suppression and somebody would own too much and they would control the market and things like that. Well, these two assets are so vastly different that it is not going to work that way. And let me explain why, and I'm going to do the best I can. It's kind of an abstract idea, but Bitcoin is, no one would argue, is mainly a store of value coin. So what that means is institutions or individuals who buy Bitcoin just go to their exchange and purchase Bitcoin, and the ETF is over here, and it purchases a ton of Bitcoin, and then people invest in the ETF, And so a whole segment of Bitcoin over here can help control the price of all of the Bitcoin by suppressing it and it being a large section or a large amount of Bitcoin. So for that asset, that can be true because the ETF is such a huge pile of Bitcoin. Now, and such a big purchaser. Those are huge purchasers of Bitcoin, just like countries are big purchasers of Bitcoin. So you've added in this giant owner of Bitcoin and the idea of derivatives can be added in, causing suppression on that end, which would affect the rest of the retail market. So, but with XRP, why is XRP different? Will, why are you saying that's completely different? Well, XRP is also a store of value, but there is a complete different scenario going on where the price is going to be driven. So all of Bitcoin is in the retail market. That's the way it's considered, whether it's a country buying it, whether it's anybody buying it, it's all retail purchasers. So the price is driven, the charts are looked at, the prices are looked at, and it's a store of value. And so the entire field of Bitcoin goes up as there's more purchasers, just supply and demand across the whole board, just like any other asset, right? Well, what makes XRP different is we're going to have institutional buyers that are not currently buying large amounts of XRP are going to suddenly be buying large amounts of XRP. And the store of value thought, since the main driver of XRP is cross-border payments, that's going to drive more price than anything. The supply that's available for cross-border supply is going to drive all of the price of XRP. So it's not going to be just the retail. I mean, you only have to own 62,000 XRP in order to be in the top 1%. Then you look at the top 10 wallets are doing over 50% of the transactions. And so that's a wild scenario. So that scenario is going to shift greatly when all the institutions start purchasing for cross-border payments. Now, the ETF or the trust fund is theoretically locking that amount of coin up. In other words, that coin in the trust fund, they can't just go and pull it out and say, we're going to use that in cross-border. It's stuck, right? It's stuck there. People are holding it. There's tons of wallets that coin is stuck there. So the ETFs, the trusts, also the tokenization, all the XRP that has been shifted to XRPL for tokenization, that's stuck. There's tons of coin in the escrow that are not available. They can't be released. They're locked up. Every time there's $1 billion dispersed in a month and 800,000 is sent back in, did you know that 800,000 has a 40-month lockout period? So we have, if you go back in time, we have 40 months of lockout period. Then you have a lot of coin that's being sent for ODL, for on-demand liquidity. So you have tons of XRP that is already being used and is not available for cross-border payments. So when all of that coin's used, is the ETF coin going to suppress XRP? When the pool over here that's getting smaller and smaller is the pool available for cross-border payments, when that pool starts being accessed and people are fighting over XRP, it's going to require the release of people, of you and me, selling our XRP to be able to start providing more, because it's going to drive the price to the moon. This pool is going to drive the price of all the XRP way up. So it doesn't work like an ETF because it's not all basically retail investors who are just purchasing on the whims of their purchases. In other words, to go ahead, I'm going to invest some now, I'm going to not invest any now. Those kinds of decisions are being made by individuals, countries, banks, and everything for BTF, but there's no major cause of a giant surge. There's not one in Bitcoin. There's not an event to take place. It already is what it is. However, XRP, that's not the case, is it? We're waiting for regulatory clarity, and we're waiting for mass adoption. So we got tons of adoption going on in gaming, in artificial intelligence. We have XRP being used. We have, the ETFs, the trust funds. We got the AMM. We have some being used for arbitrage trading. We have all of the money stuck in wallets that's parked. When I say stuck, these people, these major players, the top 10 wallets, they're probably not going to sell when it goes up. They're probably going to keep most of it for forever. They're millionaires already anyway. So I just see them not making moves that would cause a tax consequence when they can just leave it in there. So they'll probably sell small amounts. So why the XRP ETF, when it comes out, or the trust, is different from the Bitcoin ETF is because of the events that will take place and what the price driver is. The price driver in Bitcoin is it's just a store of value and it's going to go up in a bull run. The price driver for XRP is going to be mass adoption, which hasn't taken place yet. And it's going to be, and the pool that's available for that is getting smaller and smaller and smaller by all these other use cases of XRP. So that is the price driver, and that suppression, even if the ETF was trying to suppress, it isn't going to work because it's going to be way outweighed by cross-border transactions. Well, that's what I had for you today and what I wanted to discuss. I hope you're having a good Saturday. See you next video.